it's important to figure out what type of trader you want to be, because then you're able to adapt your strategy to that. What's up, guys? Just Jonah here. I wanted to go ahead and make a video on a couple things you should know before kind of diving into the technicals and fundamentals of Forex. There are little bits of information that you should be aware of before you dive deep into this. Where I want to start first is, it's kind of important to know what kind of trader you want to be. Mainly because this is going to determine what strategy you are most likely going to want to learn, the strategy you should be approaching. Because although there are several strategies that can apply to several time frames, and whether they're long positions, short positions, or even like day long positions, week long positions, there are several strategies that can work for both. However, when it comes to scalping, there are certain strategies that apply to scalpers that wouldn't apply to an intraday trader or a swing trader, and vice versa. You know, there a couple things to consider. Here are the quick differences. First of all, scalper is looking for multiple trades, and their trades are they're looking to catch anywhere between 10 and 30 pips per trade, and they'll make multiple trades of these, and they're only staying in for a couple of minutes to maybe even 1 or 2 hours per trade, and they're making several of these trades, whether it's just the morning, the day, or at night. They're looking to get in and out quickly. The thing about scalpers is that the one bad thing about scalping is that they are in and out of the market. They use high leverage, and they tend not to use a stop loss. Because they'll get the fear of getting wicked out. So that's the thing about scalpers. They're in and out, they use high leverage, and they tend not to use a stop loss. One con about being a scalper is that if you are using high leverage and you're not using a stop loss and you're only looking to get in and out, if you're not using any technical analysis, any fundamental analysis, and if you're not paying attention to that, then it can quickly turn against you. You can be in profit, and if you're not paying attention to the news, to any of the president's tweets, any of that, it can quickly go against you, and you can quickly lose the trade. And because you're using high leverage and no stop loss, then you really don't know how much money you can lose, or you don't have that risk management to like, hey, if it goes minus 15 pips, I'm out. No, at that point you then have to manually close. And if you are using technical analysis, then you can hold it, but now you're going to be in drawdown, and you can potentially stay in drawdown. So that is one con of scalping. One of the pros is that you do make money a lot quicker. You make money quickly because you're using high leverage. You only need to catch a couple of pips, and then you're good, you know? And then you can make your day's worth of money there. Another con is that you have to stay glued in front of the screen the whole time. When you're scalping, you're staying glued on that screen. So that would be the one con about scalping, you know, the pros and cons about scalping. Of course, there are more, and I would highly consider you look them up just to see if it's something you want to pursue. Most people coming into Forex do prefer scalping because it is an easier method of understanding. It is quicker money, and it is a good way to compound your money if you're using proper risk management. Grab $5 here, grab 5, grab 10, grab 5, grab 10, 15, 20, whatever your account balance is, your risk management, you can be in and out and just build your account that way. However, when it comes to long term, you're going to realize that scalping is not an effective way to trade. We as day traders, intraday traders, we don't want to be glued in front of our screen 24/7. We don't want to be looking at charts 24/7. Some of us enjoy it, don't get me wrong. But the reason we're day trading is because we ultimately want the freedom. We don't want to be glued in front of our screen for 8 hours, to make our money. Sure, like we could potentially make a lot of money in 8 hours, but we're looking to make a week's worth of pay in 4 hours. We're looking to make a day's worth of pay in 2 hours. So we're trying to make the most amount of money in as little time as possible. And scalping doesn't always give you that opportunity because you have to be on it on a consistent basis to do your trades. Because obviously not every time you get on, you're going to find a trade. So that's one thing about scalpers. And then as far as intraday traders are in and out of the market within the day. Intraday. So they are in and out within the day. Within the day, they're out. Let me rephrase that. Within the day. So it's not, it's not several minutes or hours like scalpers. They are into this. They are in and out within the day. They use proper risk management. And they typically don't like to be in the market by the time it closes. Most of the time, depending on your broker, spreads can get ridiculous at a certain time. So intraday traders do like to be out before that time. Or, it just depends on the time frame they do trade. But intraday traders do look for fewer trades than scalpers. However, they're looking to gain potentially more pips. So instead of looking for, as a scalper, let's say, for example, would look for this. This would be a scalp trade right here. I'm on this is the daily time frame, so this is probably not the best example. That's still a lot of pips. All right, let's go right here. For example, this is just an example. A scalper would look for maybe this would potentially be a scalp trade for a scalper. It's only a couple pips. They're in and out. They saw this morning star. They saw it shooting up, bullish engulfing, and they could have gotten in here and they could have made a couple pips there. Whereas an intraday trader, they, for example, will see consolidation. They'll use their analysis. They're seeing zone to zone and they're going for a longer trade. So this is the 15-minute time frame. So for example, we can see here, double bottom, head and shoulders too. We got head, shoulder, head, shoulder, sign of a reversal. However, this double bottom right here, depending on the technical analysis of that intraday trader, they would have gone in here and they would have potentially looked to take it up to this zone up here. So if we go ahead and measure that, that's 1 day and 15 hours. 1 day and 15 hours, and they made 160 pips. So that's what an intraday trader looks for. And that we can call an intraday trade. They held it for a day. They gained 160 pips rather than just what would be over here, 26 pips. So scalper right here, this little bit, we have intraday trader that will, hold it for a day or two or a couple of hours, and they'll gain more pips. And then there are the swing traders. All right, as swing trader, okay, let me go back to the notes. Okay, here it is. Oh shit. Okay. A swing trader looks for a very small handful of entries. They're going to enter 1, 2, 3, 4 times. However, their trades, they are looking to maximize the amount of pips they gain. A swing trader is looking for more than 100 to 200 pips per trade. And again, this can last several days to achieve, which is fine. With proper risk management, if you have a small account size, obviously you're using micro lots. The majority of swing traders do have higher account sizes, so they are able to use bigger lot sizes, so then they're able to maximize the amount of profits they gain. So a swing trader will hold the trade for several days and even several weeks. It doesn't mean that they place the trade and then they walk away and then they either let it hit take profit or stop loss. No, they are still, whether a daily basis or every other day, they're still checking up on their trade, making sure, it's going in the direction that they want, making sure, to see if it's hit any midpoints, if it's reversing. They're still keeping up with fundamentals and seeing any news, any live updates, and to see if it's going to affect their trade. If they're maintaining it and they're staying on top of their trade, then it's going to go their direction in a matter of days or weeks. So back to the charts. So we're on the daily time frame. So for example, right here, we see a lot of consolidation right here. We don't know where the market wants to go. A swing trader would look for the potential, let's say they do their technical analysis and they know it's going to short. They know it's going to short right here. Let's say they get in. Again, we're on the daily time frame. So let's say they get in from here after this close all the way down here to this take profit. Let's go ahead and measure that. From here to the closing of that candle to the bottom of this, we're looking at 1,450 pips. Again, that's 1,500 pips. Let's round that up. 1,500 pips that they just gained in a matter of 10 days. That's what it shows. So each candle's a day. So that's 1, 2, 3, 4, 5, 6, 7. 7 full days, not counting the weekends. And they made 1,500 pips. Whereas a day trader and scalper, they are on smaller time frames, whether it's the 30-minute, the hour, or the 2-hour. Whereas a swing trader, they're constantly looking at the daily, the 4-hour, the 2-hour, the higher time frames. That's where they make their trades. And so the reason I'm saying that it's important to know which direction you want to go before coming into and learning the technicals and fundamentals and basics is because that's going to basically give you the direction of what strategy you should be learning and what direction you should be going. Like I said, scalpers, I'm not saying they don't use technical analysis. They obviously do, but it's not as important or it's not as needed as an intraday trader or swing trader that they're looking at the bigger picture. Scalping can even be done without any technical analysis. If you know the basics, if you know price action, if you know basic support and resistance zone, you can definitely scalp for 10 to 20 pips without any strategy, without any indicators. That's the great thing about scalping is that as long as you know price action, candlestick formation, resistance, support, as long as you know that and the overall trend, then scalping is pretty simple. Where it gets more difficult is when people want to swing trade or intraday trade because technicals and fundamentals are important. Coming into this, you want to learn scalping because you want to make money quickly right then and there. But when you're looking at this long term, you realize that intraday trading and swing trading is your best bet because it still gives you more time. So swing trading, you're going to place 1 or 2 trades and you're going to let them ride 200-300 pips. Look at the one I showed you, 1,500 pips. It can even get into the thousands. But that is days to weeks, and depending on the pair, it can take longer. If you're trading indices or gold or commodities, it can be shorter. You can gain that much within 2-3 days. So, and I'm not necessarily going to be teaching the strategies for this. I will get into, some details and all that, but I kind of basically want to let you know and show you, hey, if you are looking to get started into this, please figure out what kind of trader you want to be, or at least start off with. Maybe you want to start off as a scalper and then end up an intraday trader or swing trader. Perfect. Let's learn to scalp first. Let's master scalping and then let's move up. So if you are looking to barely start off and let's say you want to learn to scalp, stay away from commodities and stay away from indices. Do not trade gold, do not trade silver, do not trade US 30, NAS 100, or SPX and 500. Do not trade those commodities and indices if you're barely learning to scalp. Stick to Forex pairs. Go ahead and look into the majors and minors of Forex. So here, major pairs of Forex. So we have it right here. Major pairs. Anything basically that ends or starts with USD is one of the major currencies. You know, these are some of the most volatile ones. We have Euro USD, GBP USD, USD JPY, USD Swiss, USD Canadian, Australian USD, and Netherlands USD. So New Zealand, I'm sorry. These are good pairs to scalp. However, because they are major pairs, they do tend to be more volatile than the minor pairs. So if they do become too volatile, look into the minor pairs. Minor pairs is basically everything else. You have Euro GBP, Euro Swiss, Euro CAD, anything that's pretty much not that's not trading against or with a United States currency. Those would be the minor pairs. Those tend to be slower. So those are also good for learning. They are good for swing trading. They are good to hold on to these trades. However, when you start getting more experience, when you start learning more, and you start trading more major and minor pairs and you feel comfortable with that, then you're going to want to touch commodities and indices, and then you're going to learn that you don't want to no longer trade currency pairs. I'm not going to get into it, but the volatility of commodities and indices will make you happy. And once you learn that skill, that's all you're going to be trading.